Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Investments Limited, and here to give you a brief outlook for the week. Uh, Last week, a lot happened in terms of Indian markets. We started the week on an extremely positive note, but as we wind up the trade for the week on Friday, all those gains that we had seen and all those positivities that was emerging at 25,000 plus levels was all down and out because of a big geopolitical event, which most of us are aware, emerging out of the Middle East between Israel and Iran. Before I go any further, it is important to give you certain levels as where we are trading this Monday morning at around about 10 o'clock this Monday morning. 81,150 is the level on Sensex with gains of about flat to positive 30 points. 24,730 gains of about Nifty, gains of about 15 odd points. Bank Nifty or Nifty Bank down 110 points, 55,420. Rupee dollar equation with all that is happening across the world. Rupee is weak against the dollar, 0.06 paise weakness, 86.14 is the level on rupee dollar. And on energy basket, which is in the spotlight for all the wrong reasons, primarily because of global disruption fears. It is not that there is short of production or it is not that there is a huge global demand. It is only a speculative reason and situation in the Middle East that has made the crude oil prices jump to these levels. $74.83 to a barrel is Brent, $73.70 to a barrel is NYMEX. uh, give you views on the rupee dollar and crude oil first, and then, of course, on the market outlook expectation and, of course, the triggers and the reasons. Expect crude oil to stay on the elevated levels because of the attack that Israel has conducted on the facilities of natural gas and crude oil in Iran. Israel has gone and hit one of the largest facilities in Iran, which contributes to a great extent to the global supply. Two-thirds of Iran's facilities are with this particular site where the attack happened yesterday and day before yesterday. And this is an ongoing process. So expect crude oil levels and natural gas levels to be at a higher level. And of course, along with precious metals, that is gold and silver, more importantly, gold will also stay at an elevated level. That is what the anticipation is. On rupee dollar equation, I think after the credit policy announcement and the positivities, all that is now done and dusted. Uh, could be that after seeing this weakness in the rupee against the dollar, we could gain some strength towards 86 and sub 86, but it will take some time. It will not be immediately. And on the weakness, I think we should see levels of say 86.30, 86.50 in case if global news flows are negative. Now coming on to the markets, friends, all that had to happen on the positive side as far as the domestic data points were concerned happened extremely well, but then we are a part of emerging market. All that happens across the globe, especially on geopolitical front or any decision front from the government, like for example what President Trump has been talking about, has its impact on the world markets, and that has its impact on the Indian markets as well. But the good part about all this negative news flow from the global arena and where our markets are, one positive things that one can take home or drive home is that after seeing the weakness on Friday and the levels where we opened up in the morning, by the time we did wind up the trade on Friday, we had recovered quite a bit of ground. So that reflects that there is some kind of buying coming into the market at lower level. Point number one. Point number two, there is lower level of volatility with India VIX cooling down to a great extent, and expectation is that India VIX should cool down further, which will lead to lesser volatility. The only joker in the pack remains the sell side figure from the FIs, who have once again turned net sellers last week and the week before. There was mixed numbers from the FIs, but last week predominantly there was a sell side number, and expect this uncertainty to drive FIs to the sell side more often rather than any kind of buying activity coming in. There may be days of some odd days wherein you will see some amount of buying activity coming in from the FI, but by and large, they are expected to be on the net sell side. Domestic institutions have been buying. They bought last week, and we expect them to buy even going into the future in case if there is any kind of elevated levels as far as sell side number is concerned. So on the markets, friends, to give you certain levels for this week, of course, in a situation wherein missiles and drones and any other kind of arsenal is fired upon two countries, especially in a situation, and of course, the global supply pipeline, friends, is as far as crude oil and natural gas is concerned, is more likely to get impacted because the passage through the Gulf of Hormuz, which is controlled by three countries, including Iran, if that is put under any kind of restrictions or total prohibition is put in place, then approximately more than 20% of global supply, as far as crude oil and natural gas is concerned, passes through that particular Gulf of Hormuz. And if that happens, then there could be more elevated level for energy prices, that is crude oil and natural gas, which will of course be temporarily negative for emerging markets and of course markets across the globe, especially emerging markets like India because of our dependency on imports, crude oil and natural gas. So that's going to be the broad theme. Of course, there has been a lot of news flows about situation improving, but it can only happen once both the leaders of the respective country, Israel and Iran, sit across and iron out issues. At least that looks difficult for the time being, given the aggression both of them are showing on each other. So, to give you a brief, approximate level, of course, very difficult to predict, but whatever we have understood over the last 1 week or a fortnight, we'll try to put some levels in place on the lower side and higher side. So, 24,400 to 24,500 on the lower side and 24,800 to 25,000 on the higher side. India VIX volatility has come down 14.75, down about 2.40% as I speak to you this Monday morning, and expected to cool off further to 14, 13.5 and 13%, which will lead to some kind of stability in the market. FIs and DIs activity, like I mentioned, FI is net net negative, DI is net net positive, and this is likely to continue as we go forward from here on. I think it is more prominent to be sector specific in this kind of a market. So our view is that not only in the short to medium term, but also in the long term, defense, capital goods, real estate, and housing finance companies. Mind you, it is prudent to give a disclosure over here before I go any further that all these recommendations are a part of our research team. Our company Geojit or myself, we do not have any financial or investment interest in either of the stocks, nor there is any material conflict of interest. However, we give similar recommendations to our clients. They might be having their investment interest in the stocks recommended and discussed. Now, going further, we were talking about sectors to watch out for. So, defense, capital markets, real estate, and housing finance companies. These are the three sectors which are prominently be on the radars of long-term to medium-term investors. And of course, more so housing finance and real estate companies because transition of rate cuts have started to happen. SBI, for example, has reduced their housing finance loans by 50 basis point and expect that other state bank, other PSU banks and private sector banks will follow the suit. And of course, in terms of affordability and demand for housing and housing finance loans is likely to go up in the future. One big joker in the pack, friends, in the near term remains crude oil prices. And of course, the evolving situation for the wrong reasons in the Middle East. And of course, on the flip side, not to forget, friends, we are only focusing on Middle East. There is Russia and Ukraine also. A fortnight back, Ukraine had done some misadventure on Russia, and Russia is retaliating to it. So we have two big geopolitical situations to handle. But needless to say, I think as of now we are unscratched, and our markets especially. I'm not talking about the geopolitical any negativity on our country, but I'm talking about capital markets per se. We are unscratched and hope that we stay unscratched and recover from these levels where we are. And more importantly, the situation in both Russia, Ukraine, and Israel, Iran. If they have to improve, then that will be a added advantage. But it looks very difficult the way both Israel, Iran, and Ukraine, Russia are positioning themselves. There has been sizable damage in all the countries because of the aggression that have been shown by each other and the positioning of egos that have been put in place. So we'll be stuck in a range, friends, once again 24,400 to 24,500 on the lower side, 24,800 to 25,000 on the higher side. But again, there are going to be plenty of opportunities. I have briefly discussed about defense, capital markets, real estate, and housing finance companies, but we believe pharma and auto is also something that should be on your radar. So there are two investment ideas. First one is a small to mid cap pharma company, Mankind Pharma. Again, before I go any further, these recommendations are for long term from our research team. My company, Geojit, or myself, we don't have any investment or financial interest, nor any conflict of interest, but we give similar recommendations to our clients. They might be having their investment interest. So first one is Mankind Pharma, a diversified company as far as pharma sector is concerned. A tremendous amount of product launches and offerings on the shelf, and equally is the consumer loyalty towards the products of Mankind Pharma. So this is a long-term investment idea. This is not BTST or short-term, medium-term. Please bear that in mind. So first one is Mankind Pharma from Pharma. Second one is Mahindra and Mahindra. Mahindra and Mahindra primarily because of friends of the portfolio that Mahindra has, especially with respect to utility, light commercial vehicle, and tractor and agri equipments. With the monsoon arrival very strong and forecast of long-term averages in place this year, expect demand for utility vehicles, small and medium-sized commercial vehicles, and more importantly, tractor and agri equipments to grow, and that will reflect positive on the earnings of Mahindra and Mahindra. Again, there is a sword hanging on the auto sector in form of inventories pile up at dealer side and the tariff related issues for the auto sector from the United States of America. But having said that, long term investors, I think there is a lot to look at on the positive side in with both these companies. Only thing is, stagger your investment, don't put all your money at one time. And as and when you get dips, add on to the stocks. Thank you very much for your patience hearing. I'll see you again next week. Till then, please take care of yourself. Bye bye.